Hello and welcome back to the Wall Street Petting Zoo. This is our This Week at the Zoo segment in which we review the market news for the week and look forward to next week. I'm Christopher Smith.
And I'm Robert Coburn.
And this week, Robert, we had some early earnings starting the earnings season, and we had some economic data that was pretty interesting. And then we also had a couple of trade deals signed. So lots to talk about this week. We started off the week on Monday with the market surging higher on optimism around the trade deal that was scheduled to be signed on Wednesday. And according to a report from CNBC, the U.S. Is going to delist China as a currency manipulator as part of the deal. And so that's part of what pushed stocks quite a bit higher on Monday, especially stocks with a lot of China exposure jumped on that news. And Tesla, in particular, broke the $500 per share price for the first time ever after an Oppenheimer analyst set a price target of $612 for Tesla, which seems insane to me, but, bully for Tesla people.
Yeah, it's that stock was only at 300 in November, so it's almost set to double. It's crazy.
Yeah, that is pretty wild. I mean, it's great. I think it's pretty significant that Tesla turned its first profit ever this year, so I can see why the stock went on a big run. But it is looking a little bit overvalued to me right now. But
Yeah, and then Tuesday morning we got reports that indicated that the small business confidence index had fallen slightly in December and came in slightly below analyst expectations. Wages also looked weak, with inflation-adjusted wages having fallen 0.1% in December. Stocks pulled back slightly on this week economic data Tuesday morning, despite JP Morgan, Citigroup, and Delta Airlines reporting better than expected quarterly results, kicking off the quarterly earnings reporting season. Healthcare stocks moved higher, however, on reports that healthcare costs grew a whopping 0.6% in December and over 4.5% for the full year 2019. It was also reported that the U.S. tariffs on Chinese goods will remain through the 2020 election, despite the news that the deal would be signed on Wednesday.
yeah, and then Wednesday, we got the signing of that deal, but stocks continued slightly lower on Wednesday, despite the signing of the Phase 1 trade deal. I think partly because of that news that the tariffs will remain in place through the 2020 election. So it was not entirely what investors had expected going into the signing of the trade deal, but it was only a slight downtick in stocks. It was not a big loss on Wednesday. And one of the big losers on Wednesday was FedEx. FedEx significantly missed analyst expectations and moved quite sharply lower on Wednesday.
And then Thursday, the market moved sharply higher after jobless claims came in slightly better than expected. The Philadelphia Federal Reserve released data showing a rise in business activity for the month, and Morgan Stanley's earnings greatly beat analyst expectations. Taiwan Semiconductor also posted an earnings beat. However, some of the China tech giants pulled back on Thursday after peer-to-peer lending company, I believe that's pronounced Kudian,
maybe? Kudian? I don't know.
Withdrew its guidance, saying that they regularly in the regulatory environment in China worsened this quarter, causing a drop in loan volume and a spike in default rates. This may be bad news for Alibaba, Yuandai, JD.com, and Tencent, all of which have exposure to the China peer-to-peer lending market.
Yeah, those stocks, have earnings dates coming up, and we might see some of them miss analyst estimates on their earnings reports. The stocks pretty much all have a lot of momentum moving higher. So we saw, Alibaba pause for a couple of days, but then it kept moving higher. So it will be interesting to see if a lot of investors get burned on the Alibaba earnings. Yuandai has reversed course following Kudian down. Yuandai is primarily a consumer credit company, much like Kudian is. And so it's got a lot of exposure to that market, whereas Alibaba's exposure, it's hard to know how much exposure Alibaba has because it only just recently bought a stake in a peer-to-peer lending company. And so we don't really know yet sort of what proportion of its earnings will be related to that peer-to-peer lending market. So I'm not really sure what to expect on Alibaba. The market's run continued on Friday, however, after a big positive surprise in U.S. housing starts. And that's great news for the real estate market. And it's also great news for Home Depot. We saw Home Depot go on a big run this week, and especially after these positive housing numbers came in on Friday. Real estate and construction have gotten a lot of grim forecasts lately. So this is a bit of a game changer for those sectors. We also saw a big positive surprise on the China manufacturing report. China, its manufacturing sector was quite a bit better than expected, and so Chinese stocks were surging on Friday as well. There were a couple weak numbers released Friday, including a slight drop in consumer confidence from 99.6 to 99.1, so it's still quite high, but it did come down a little bit, missed analyst expectations. And we also got a bad job openings number, but that was from back in November, so probably the job market outlook has changed since then. So that JOLTS job report is one that lags a couple months, and so it's not one that significantly moves the market when it comes out. So overall, the economic news was pretty positive, but it wasn't extremely positive. And that's actually good news in some ways, because it's time to start thinking about the next Fed meeting in a week and a half. And future markets have been putting the odds of an interest rate hike, that the Fed might actually increase interest rates, at about 17%, which that's not high, but it's not zero either. And as the futures market has been digesting that economic data from this week, we've actually seen the odds of an interest rate hike come down a little bit over the weekend. So we're at like 14%. 15% range for the odds of an interest rate hike from the Fed in a week and a half right now. So it's actually looking like the interest rate environment will remain fairly positive, which is good news, not only for stocks, but also for oil, energy companies and material companies, especially metals like gold and silver. So those companies should benefit if the Fed decides in a week and a half to keep rates steady. If the Fed does decide to hike interest rates, then the financial sector might benefit from that. So that's really the only sector of the market that might benefit from a rate hike, because, of course, higher interest rates increase the profit margins for lenders. So keep an eye on that. There's a tool online called the FOMC FedWatch tool. And so if you want to keep an eye on interest rates over the coming week and a half or so, you can Google that FOMC FedWatch, and you can see sort of the daily changes in the odds that traders are putting on the likelihood of a Fed rate hike. Also looking forward to the week ahead, Robert, we've got a bunch of major earnings reports. We've got banks and technology companies primarily, including American Express, IBM, Netflix, and Intel. This week's earnings beats from Morgan Stanley and Taiwan Semiconductor should bode well for earnings from banks, IBM, and Intel next week. Although I would point out that Morgan Stanley is an investment bank, and its earnings beat was mainly driven by favorable conditions for the bond trading market. Whereas this week we had Regions Financial, which is a consumer-facing, smaller cap, consumer-facing bank that actually missed expectations a little bit. So a lot of the earnings next week are for smaller consumer-facing banks. And also with the Fed thinking about, the likelihood of a Fed rate hike falling over the weekend, I'm going to be really watching closely on Monday to see what the banking sector does. If the banking ETFs fall on Monday, then I will be exiting those sectors. So I think that we still have Monday is going to be a bellwether for what banks do the rest of the week. But I do expect probably some earnings beats from, at the very least, Intel. We did get an analyst downgrade in IBM this week because they think that IBM might miss its earnings. So kind of a mixed earnings outlook next week, and we'll see sort of Monday how things are looking. Let's see. Last week, you were not here, Robert, but you had made some stock picks from a couple weeks ago. So why don't you give us an update on how the stocks that you've been watching have been performing?
Okay, so I was watching two stocks this week. Activision Blizzard continues to rise above their 52-week high. I'm looking for the door, though, because I'm more looking for an exit because I don't know if I want to wait for their next quarterly earnings report. I have basically, if I ring the register now, I do make a significant profit. But I do know that they've had a successful annual release of their Call of Duty series, and there are strong reports that their World of Warcraft subscriptions are doing very well. So I may just sit and wait on this, or I may just pull out half and then wait for the rest for the quarterly earnings report later this quarter. Zoom, as I've been following for the past couple months, this stock is keep zooming higher and higher. I believe I texted Chris this week when I noticed that the stock was up $3 on Wednesday, and it actually ended up being $4 higher that day. If this stock doesn't start to slow down, I anticipate the stock to hit $100 well ahead of my earlier estimates of mid-2020, which is pretty crazy. So, Chris, what stocks were you watching?
That is pretty wild. You had a great week in Zoom. I, of course, have been watching Baidu for quite a while now, and Baidu actually pulled back a little bit this week, despite a bunch of good news, including a China trade deal. Possibly it was affected by the fact that the tariffs are not coming off until after the election, so that may be one reason that it pulled back a little bit this week. It also got a big analyst upgrade from Oppenheimer, which in the morning it moved up on that, and then it ended the day down, actually. It launched a new cryptocurrency called Superchain, and it also got a big deal from Tesla for Tesla to use Baidu rather than Google for its China Maps app in cars that Tesla sells to China. So there was a lot of great news, really, for Baidu this week, but it did end the week a little bit lower than it had started the week. So I think basically what's happening is Baidu is just hitting some technical resistance at about 140 per share, which is kind of a critical level. And I expect that once it pushes through that resistance, hopefully next week, it will continue moving higher toward 160. I also watched Carnival Cruise Lines this week, which had a really great week. It's up over 6% for the week. And it ended the week just above a critical resistance level. So I think it will continue to move higher in the coming week. So I had a pretty good week in Carnival Cruise Lines, although Baidu disappointed me a little bit this week.
Yeah, it's funny that Tesla agreed to use Baidu instead of Google. I mean, from a international standpoint, and all the international laws and how much China doesn't really like Google, it kind of makes sense that they use Baidu. But at the same time, remember when Apple phones went to using Apple Maps instead of Google Maps, how bad that was. But I mean, I assume Baidu's not going to be as bad, but I think that's the better play for Tesla in that area because of how much Google is not liked in China.
Yeah, well, keep in mind, Google has been growing its market share, but it's still only about 16% of the China search engine market. Baidu's more like 60-70%. So Baidu is a much bigger name in China. It's probably more trusted and probably has done more work to actually do the mapping work in China. I don't know how much energy Google has actually dedicated to mapping China. And Baidu has been criticized, however, because its AI is not as good as Google's. Its search engine results are not as good. And so it's actually been losing some search engine market share in China. And so it's possible that if their AI is not as good for search engines, it also might not be as good for maps. But Baidu has been doing a lot of R&D work on AI, so it may catch up within the next year or so, and that may become a non-issue. I think we'll see what happens with that.
Well, I do know that in China, most of the Google platform is blocked, like Gmail, Calendar, Drive, those type of things.
Right.
They're actually blocked in China.
The Chinese government doesn't really want free access to information, and so they have cracked down on Google in pretty significant ways in an attempt to sort of control the flow of information.
Yeah.
So what are you watching this week, Robert?
This week, so Nokia has had some odd trading patterns that I think should be mentioned. So the stock once traded at $62. This is back in the .com era, and so around 1997, and has had a fall from grace since then. I mean, it's down to sub $5. I think right now it's trading at about $4. The last time the stock rallied was in November of 2016, right after Donald Trump's election. So it will be quite interesting to see if Donald Trump does get reelected this November, will the stock rally again? As for trading in the present day, the stock just recovered from its 25% dip in late 2019, one I was a victim of, one which I recently just broke even. So it is a rare occurrence for a stock to dip 25% and recover it in less than 30 days. I don't see them ever returning to their .com era numbers unless they change their business strategy, so don't expect a price target over $10 anytime soon. Another stock I will be watching this week is Alaska Airlines, which has a strong history of beating estimates. It will be reporting on Wednesday after the market close. This could cause the stock to jump back over the $70 mark, back to where it was in November. It currently sits at $66, and Delta Airlines did also post a good quarterly earnings report, so I'm hoping Alaska Airlines follows suit with that. I will also be watching Synchrony Financial, which provides financing for consumers paying for doctor's visits, surgeries, etc. They're expected to report a lower revenue numbers than last year, but I have a gut feeling that they may actually end up beating the expectations, which would cause the stock price to jump, as it appears the expected earnings report is already baked into the current stock price, because it already looks like based on the dip it's seen in the last month or so, basically it looks like the owners of the stock have been kind of like selling it off to basically right before the earnings report, where they think it's going to dip more, but I actually think it's going to go up. American Express is the last stock I will be watching this week, and I believe it will have a great report with another record-breaking online sales this past holiday season. You can't use cash to buy gifts online, so that only leaves the credit card companies.
Yeah, we're kind of on the same page, Robert. I actually bought some Alaska Airlines and Synchrony Financial shares this week because both of them have great valuations, great analyst ratings, and are at kind of like nice technical support levels, and look like they're going to rally. So I'm definitely watching those as well. And Nokia, I've actually got a couple of Nokia calls, $5 calls for sometime late February. So I bought those for like 5 cents each. And so I'm watching Nokia to see if it rises. I've been thinking about getting out because it definitely met some resistance at the $4 level, but it did surge a little bit higher on Friday. So I think it's like 420 or something like that right now. So maybe I'll hang on to those $5 calls next week and see what happens with them.
Yeah, I'm happy. I doubled down when they dipped 25%. I think I had about 100 shares before, and then I basically just bought another 100 after they dipped 25% after that horrible dip. But I mean, that's the good thing about those dips is you can make more money on them or you can recover more money on them if you know it's going to recover.
Yeah, well, I think 450 is probably about fair value for the stock, so it still has a little bit of room to move up. I don't know that it will actually hit the $5 that I've targeted in my calls, but I will probably just scalp those calls. I'll sell them off once it hits about 450. But it does have 5G coming this year. We've got 5G coming this year, and so telecom stocks are fairly hot right now. And of course, stocks can get a little bit overheated sometimes when there's a lot of hype around a new technology. So, we might see $5 in Nokia sometime soon. It wouldn't shock me to see that.
Yep. It would be nice for me.
Yeah.
So
that would be nice.
What other stocks were you looking at this week?
Well, in addition to Baidu and Carnival, both of which I'm still watching this week, I am also going to be playing the RYF, which is an equal weight financial stocks ETF. Like I said, I'm going to be watching that on Monday, and I'm going to basically treat Monday as the bellwether for the rest of the week. So if it goes up Monday, then I'll hang on to it. If it drops Monday, then I'll probably sell it off. I'm also playing the Jets Airline stocks ETF. This is both the financial stocks ETF and the airline stocks ETF are at really nice, attractive valuations. And with most of the market overheated, I'm focusing on sort of good values. And so with these two ETFs at really nice valuations. I think they're good plays, and both of them have some momentum right now. So going into next week, I think the prospects for both of them will look pretty good. Airline earnings have had a pretty good season so far. As you mentioned, Delta Airlines beat expectations. And next week we have United Airlines and Alaska Airlines posting earnings. So I am going to be hanging on to that ETF through the week, and we'll see how it goes. And I also think the SOXX semiconductor ETF looks pretty good right now. I think that it probably will move higher, although it's definitely a little bit overpriced right now. It will depend entirely on what happens with Intel earnings, which I think are coming Thursday. So I may just hold it through Wednesday. Often tech companies get kind of a nice run up in share price leading into earnings. So I think through Wednesday, at least, SOXX should be up. And then depending what happens with Intel earnings on Thursday, I probably will exit on Wednesday and then consider re-entering on Thursday, depending what the Intel earnings look like. One individual stock that I'm watching right now is CVS. CVS moved higher this week after announcing that it's going to open 600 new Health Hub stores this year. And it ended the week at a resistance level, but I think it could break out higher next week. So I've got a couple calls actually on CVS. I've been playing a little bit with options trading lately. Put about $300 into an options account, and in the last week and a half or so, I'm up to $500. So I'm doing pretty well in the options market so far. I've also got a couple AT&T calls. AT&T looks like it's been dropping after its dividend. Often stocks will drop after their dividend. But AT&T has a history of dropping after its dividend and then recovering pretty quickly. So AT&T seems to have hit a support level, and so I'll be looking for AT&T to surge higher this week. And I may also pick up a couple of pharmaceutical calls on pharmaceutical companies early in the week. We've got Intra-Cellular Therapies that got a big surge recently after the FDA approved its schizophrenia drug. But then it dropped quite a bit after it announced its fundraising deal. It's going to issue a bunch of new shares in order to fund the development of that drug. So it has been coming down quite a bit, but it seems to be in kind of a support zone right now. It's bounced a little bit. And so I think it might start to move higher next week. I'm seeing the options activity turn bullish on it. So we may see Intracellular surge next week. And also Clovis Oncology got FDA approval for a new cancer drug. And so that one might also gain next week. It's been a little slow to start. It was a few days ago that it got the FDA approval, but it has over the last couple of days gained a few percent. And I think that it may start to surge next week as the market gets more optimistic about what that cancer drug is going to do for Clovis's earnings. Both of those companies are companies that haven't turned a profit yet. They're non-profitable companies, which means that they're not investments. They're just kind of scalp plays. They're sort of short-term swing trades. So these are not things that I would hold on to for the long term. These are just things that I'll quick and dirty try to scalp them for a quick profit in the options market. So kind of fun to play options. I'm having a good time with it.
It's more gambling, but then again, most stock trading is technically gambling, just with a lot less risk if you're playing the bigger players.
Yeah, and it depends a little bit how you design your call options, because you can buy what are called covered calls, which basically they're already in the money, and so you're not at as much risk of losing your total investment. And you can scalp them if they start to turn downward a little bit. Whereas if you buy calls at a higher strike price than the current price, then basically it's pretty easy for you to lose your whole amount that you spent on that call. So maybe we'll have to do an educational video sometime on options trading and how to sort of minimize your risk in the options market. But I am tending to go toward the lower risk call options rather than the higher risk ones where I could lose all of my money on it.
Yeah, you don't want to do that.
No, because if you lose your capital, then you can't gamble anymore.
So the stock market will be closed on Monday. I did notice that you were going to be watching some stocks on Monday, but Monday is an observance of Martin Luther King Day.
Good point. I knew that, but I had forgotten, so I appreciate the reminder. Alrighty, well, if you guys enjoyed this video, if you learned anything that was useful to you, please give us a like, comment, share on YouTube. You can follow us on social media. There are links underneath the YouTube video. And we also have a Webull referral link. I think they've got a special referral deal right now where if you sign up, you get 2 stocks. We get 2 stocks. So great way to support the podcast. You just have to sign up for it and deposit $100 in your Webull account. I have to say I reopened my Robinhood account recently to do the options trading, but Webull has just added options. So now there's even less reason to use Robinhood. And I just love the interface on Webull so much better than I like Robinhood. I continue to be impressed at just how much better Webull is as a trading platform. So highly recommend Webull. Go ahead and sign up for it. And like I said, it's a great way to support the podcast. And we will see you next week at the zoo.
See you.